Welcome to this explainer. You know, chances are you probably don't have a piece of Cisco hardware sitting on your desk right now. But here is the really wild part. Even if you don't own a single Cisco device, you are relying on their invisible plumbing at this exact moment just to watch this. Literally every packet of data, every video stream, every email you send is more than likely traveling through a vast, completely hidden empire of wires and routers that they built.
So that leads us to a pretty fascinating question. How exactly did a single localized campus project become the foundational plumbing of the global internet? The stakes here are just incredible. We're looking at a company that managed to lose 80% of its value during the dot-com crash in 2001, and yet it didn't fold. No way. Instead, it survived, it evolved, and it continues to quietly run the modern world.
Okay, let's dive into this. We're going to navigate this incredible 40-year history using a quick 5-part roadmap. We'll start with connecting the campus. They moved to the dot-com boom and bust. From there, we'll explore the acquisition engine, beyond the router, and finally, we'll wrap up by examining the controversies of a giant.
Part 1. Connecting the campus. Our story doesn't actually start in some fancy corporate boardroom. It starts with a little bit of early 1980s drama at Stanford University. Two computer scientists, a married couple, named Bosack and Sandy Lerner, basically just wanted to connect the university's different computer systems so they could talk to one another. Using software originally written by a research engineer named William Yeager, they helped create something called the Blue Box. And that Blue Box was, fundamentally, what we call a multi-protocol router. In really simple terms, it's just a device that allows completely different computer networks to communicate, regardless of whether they have distinct operating systems or use totally different network protocols. It sounds super basic to us now, right? But this simple idea of bridging local area networks, or LANs, was the absolute foundation of the modern internet. It allowed completely disparate systems to finally speak a common language.
Well, things moved incredibly fast from there. The company was founded in December 1984, but not without some serious friction. Bosack and his colleague, Kirk Logheed, were actually forced to resign from Stanford over intellectual property disputes, before the university eventually agreed to license the software back to them. By 1986, they shipped their very first multi-protocol router. And here's a fun, kind of quirky fact. They named the company after San Francisco, which is why the early engineers insisted on spelling Cisco with a lowercase c. Then, in 1990, this scrappy little startup went public.
Which brings us to Part 2, the dot-com boom and bust. That 1990 IPO set the stage for an absolute rocket ship ride in the 1990s. As the Internet Protocol, or IP, became the undisputed global standard for communication, the demand for the hardware to support it absolutely exploded. Basically, if you wanted to get your business on the Internet, you needed this equipment. And that demand led to this staggering number, $500 billion. In late March of the year 2000, at the absolute peak of the dot-com bubble, Cisco's market capitalization crossed $500 billion. They officially surpassed Microsoft to become the most valuable company in the entire world. They were literally supplying the pickaxes for the digital gold rush.
Now, what's really interesting about this slide is the sheer scale of the crash that followed. When the dot-com bubble burst, telecommunications spending evaporated almost overnight. By 2002, the company had lost $431 billion in value. That is an 80% loss in market cap. For most companies, a drop like that is a guaranteed death sentence.
But instead of dying, they adapted. You see, survival meant blurring the lines between hardware and software. Nimble competitors like Juniper Networks had emerged and were chipping away at their market share by processing packets entirely in hardware. In response, Cisco didn't just sit still. They developed their own custom silicon known as ASICs and built incredibly advanced new operating systems like iOS XR just to handle these massive carrier-grade networks.
Moving right along to Part 3, the acquisition engine.
And this brilliantly illustrates how they scaled, because innovating in-house was only half the story. To truly build an empire, you can't just invent. You have to buy. Over the decades, they've purchased well over 100 companies to absorb top talent and flagship technologies. They once tried to dominate the home consumer market by buying Linksys in 2003, but eventually pivoted away from consumers entirely, selling Linksys off in 2013. Compare that to their recent moves, going all in on enterprise software and data. Just recently, they closed a massive $28 billion deal for the cybersecurity and analytics firm Splunk. They realized the real money isn't in your living room. It's in securing the enterprise cloud.
If you want proof of how effective this strategy has been, just take a look at their actual business fundamentals. Despite the stock market roller coaster we talked about, the core business literally never stopped growing.
In the year 2000, they made about $19 billion in revenue with 30,000 employees. Fast forward to 2010, revenue doubled to $40 billion, and by 2025, they're generating over $56 billion in revenue with a massive global workforce of over 86,000 people. The stock price might have crashed back in the day, but the actual company just kept expanding.
Part 4, Beyond the Router.
Which brings us to their modern technological footprint today. We're moving far beyond the traditional router here, returning to that concept of the invisible plumbing we talked about at the start. Because today, that plumbing isn't just hardware. It's a vast ecosystem of software and services that dictate how we work and communicate. They quickly diversified into entirely new sectors. They pioneered voice over IP, completely replacing traditional office phone systems. They pushed heavily into software-defined networking and the Internet of Things, allowing billions of devices to seamlessly share data. And of course, video conferencing. Through acquisitions like WebEx, they provided the critical software infrastructure that enables modern remote work all around the globe.
But hey, they absolutely haven't forgotten their hardware roots. Just look at this. Their modern Silicon One G200 network chip reaches processing speeds of 51.2 terabits per second. When you compare that to the speeds of those early 1980s campus networks back at Stanford, the leap in sheer technological power is just breathtaking. It's the engine required to run the modern cloud.
However, operating on this massive global scale brings some really sudden physical risks. In 2023, following the invasion of Ukraine, the company completely curtailed sales and services in Russia. Because they couldn't safely re-export their gear, they were forced to physically destroy 1.86 billion rubles worth of equipment, spare parts, and even office furniture. It's a pretty stark reminder of the geopolitical reality of being a global tech giant.
Finally, Part 5, Controversies of a Giant.
So the crucial point here is that when you build the infrastructure for the entire world, you are inevitably going to invite intense global scrutiny. It is frankly impossible to route a massive percentage of the world's internet traffic without finding yourself at the center of complex geopolitical, security, and legal controversies. We see this across 3 distinct areas outlined in the source material. First, there have been allegations regarding their equipment being used for censorship and tracking in China, though the company explicitly states they do not develop specialized filtering capabilities for governments. Second, there was a major intellectual property lawsuit from the Free Software Foundation regarding open-source licenses, which was eventually settled. And third, disclosures revealed covert supply chain interceptions by the U.S. National Security Agency. According to leaked documents, the NSA's Tailored Access Operations Unit would physically intercept shipments of networking gear to install covert firmware before the devices even reached their destinations. An NSA manager was quoted describing these Trojan horse systems as some of the most productive operations in TAO because they pre-position access points into hard target networks. The company's sheer ubiquity made its hardware a prime target for international intelligence operations, prompting their chief security officer to publicly deny working with any government to weaken their products.
Let's move to see how this intense focus on security builds directly into their vision for the future, which is undeniably focused right now on artificial intelligence. Just recently, their CEO traveled to the Vatican to sign the Rome Call for AI Ethics, actively endorsing principles for responsible AI use. They are aggressively consolidating their teams to focus on cybersecurity and artificial intelligence, aiming to secure the very networks they helped invent.
Which leaves us right here. From a single campus project to a $500 billion peak, surviving crashes and navigating complex global controversies, they have quite literally built the modern world. But as our society becomes utterly dependent on AI and the Internet of Things, who will truly control the invisible infrastructure of our future? Thank you so much for joining me for this explainer. I really hope you walk away with a deeper curiosity about the hidden wires running your life.